All right.
You sure? You didn't show up?
Coordinate, we are. So, see if we can get this going over here. And yes, we are. So, how's everybody doing today?
It's a good day so far.
It is. It's Monday. And today we're going to be talking about this awesome new deal that just passed in our Alabama legislature, HB 248. And what it is basically it's a first time and second chance homebuyer savings account that they approved. And we're going to go over some of the cool things that's going to be in place with that. So before we get started too, go ahead.
Hi, I'm Krista.
Yes.
And welcome to Monday Mortgage Matters.
Live. This is the beauty of unedited video.
We have the intro. We have the,
Yeah, should I play the music?
the music. No, just sing it.
So anyway, so post your questions below if we're talking about this stuff. We should be able to pull it up here and see all that. So and answer them live here on the air, on the video. So anyway, so here we go. This law was signed into effect on May the 28th by Governor Kay Ivey. And it was introduced by, I forgot the guy's name. Anyway, a really cool young legislator introduced this bill, so it's really, really cool. So props to you. And I know that the Alabama Home Realtor Association was behind this and all that, so they helped to get all this passed. So very cool. It officially, I'll say this out of the gate, this new savings account it goes into effect January the 1st. All right, so you can't start saving like tomorrow. I mean, you can, don't get me wrong, but you can't open this specific type of account until January 1st of 2019. So here we go. Here's a few things of how it works. Number one, accounts may be opened by first-time homebuyers and those re-entering the market if you hadn't owned a home in the last 10 years. So it's not your typical first-time homebuyer classification like for us in the mortgage industry, which means you hadn't owned a home in 3 years. That's not the case. This specific ones means you've never owned a home or you haven't owned a home in 10 years. So cool.
You want to go?
Hit it.
Okay. Savings from the account can be used to pay for a down payment and or closing cost for the purchase of a single-family dwelling.
That's right. So kind of the whole idea behind this thing is you save money and you can use that money for down payment or closing costs when you buy a home, right? So number three, here's the cool part. The principal deposits and the earnings from this account are deductible, which is pretty freaking cool for a non-homeowner, right? Because typically homeowners are the ones that get all those deductions for property taxes and mortgage interest and all these different things, mortgage insurance. Now, as a first-time home buyer, second chance home buyer, you can have these deductions for the money you put in these accounts for up to $5,000 a year for those filing individually, or $10,000 a year if you are married filing jointly. So that's an incredible deductibility from your income. Also, these deductions from these deposits and earnings cannot exceed $50,000 over the life of this deal. So, and we're going to kind of get into the time frames. So there you go.
The money for qualified expenses must be used within 5 years from opening the account. Penalties apply if funds withdrawn or used for any non-qualified purposes.
That's right. So kind of what that means is basically the money that you save and the interest that grows in this account has got to be used for qualified expenses. It's kind of like having an HSA account, right, for a medical type deal. You got to use these, or a college savings account. Some of those things, you have to use it for the intended purposes. Otherwise, you could be subject to some penalties, and I don't really know what those are just yet. I kind of read through the actual bill that was signed into law over the weekend to get a little more detail, but there's some penalties involved, so I don't want to quote me on that. And finally, the account can be opened at any institution authorized to do business in Alabama, and you can put cash, obviously, or marketable securities in those accounts. So basically, any bank or credit union probably licensed to do business in Alabama, you can open up these accounts. Again, effective January the 1st of next year. So have any questions so far? So if you got questions, please post them below. We will try to answer them. We don't know all the ins and outs of this thing, but we do want to cover just this really, really cool new thing. So share this video with somebody you know, post your questions, and yeah. What's up, Teresa? I'll say hello to a few people here. Who we got? Teresa, Amanda. What's going on, Amanda? So Amanda, she works at People's Bank, and she'll be one of the few that she may know more about this than I do. We'll just bring you on, Amanda. She works at a local bank here in Coleman, and you know, that's one of the obviously the institutions that will be able to open these accounts starting next year. So, what's up, Mary, Candace, Rick? What's going on, sir? Angela, lots of people on. So just if you will share this video, hopefully this will get the information out to a lot of people that this may impact. So, let's talk about projected impact.
Yes.
Let's do it. So, they did some numbers, they did some studies obviously on this stuff and the projected impact of these savings accounts. So right now there's an estimated 570,000 renters in Alabama, which is an incredible number. And approximately 328,000 of those are aged 44 years old or less. So they anticipate, you know, up to 0.2% to just over 1% of the eligible renters that would use this account, which would be somewhere between 590 to 3,600 households that actually could benefit from this. So that's still an enormous amount of potential to the home buying market for the next 5 years or so.
Yeah.
Cool.
The first-time homebuyers savings account program is projected to increase home sales transaction by 130 to 4,160 sales per year.
Wow. Which is crazy.
That's
for those in the real estate market, that's a big number. And obviously it may fall somewhere in between those, but it'd be huge. You know, just I think about a home buyer or potential home buyer or renter that wants to save some money, and they start putting some money back for a year or two, and they get all these tax deductible benefits from it for a couple of years, and then go buy a home. It's incredible.
There you go.
You know. And finally, I just want to say hello to some of these people. Stephanie Shaw, Stephen, Alexis. Hey, Alexis. Stephanie Carroll, my dad.
Your dad.
What's up, Dad?
Hello, Mr. Stein.
Yeah, so share this with people. If you're just tuning in, share this video. Just hit that little share button and get this information out to those who need it. Finally, just one of the other projected impacts was the first-time homebuyer savings account program would have a positive net economic impact on the state that would range somewhere between $2.4 million to $26 million annually in economic activity because of all the, basically when somebody buys a home, there's a lot of activity economically that happens at that point. It's not just, you know, commissions being paid to a realtor and a lender and a title company. Like it impacts, you know, people spending money like at Lowe's and Home Depot and all these other industries that impact every time a home is purchased. So it's huge. And also this first-time homebuyer savings account program would create up to 245 jobs and increase annual earnings for residents by like $613,000 to $6.8 million across all these different sectors that are impacted by home ownership. So lots of technical stuff that we're going over today.
Exciting.
Yeah.
Exciting technical stuff.
It is. But it really is a cool program. I mean, like, so if you were a renter, would this be like a big deal to you? Like, would you be excited about this?
Oh, yeah.
Get that tax deductibility.
Heck yeah.
Yeah. I mean, so if you could save, you know, $5,000 a year as a potential person and knock that off your taxable income as a single person, up to $10,000 as a joint, married filing jointly, that's an incredible amount of tax savings too that you get rolling up into the home ownership. Now, you know, all that being said,
You have a question?
Any questions? So like, who pays closing when buying a home for the first time? So that's a great question, Mary. So, you know, we're talking about saving all this money. There's lots of programs out there that don't require, well, a couple of programs really, I'll say lots, that don't require a down payment. There's still closing costs. You know, those range anywhere from 3 to 6% of your loan amount, depending on your loan size. So who pays these closing costs is a lot of time negotiated as a part of your purchase price or your seller, your offer. Many times the seller is paying if not all of those costs, a large majority of those costs for first-time home buyers. I mean, I'm probably 99 out of 100 first-time home buyers that come through here, the sellers pretty much negotiated to pay all their closing costs so that they don't have to come out of pocket for those costs. Great question. Any other questions about this program, this new program? If you're just joining, hit the share button. We want to get this information out. It's been, signed into law, like I said, at the end of May, but it really doesn't go into effect until January. So you probably hadn't heard a lot of information about this just yet because you can't really open an account yet. But we want to let you know it's coming. Any other questions about first-time home buying? Anything like that? Just post them below, and we won't keep you on here for too long. Can't tell how long we've been going just yet, but anyway. What are points? I hear about. It's a great question, Mary. So points are basically when you're prepaying some of the interest up front to the lender to buy down your interest rate for the life of your loan, right? So that sometimes you can pay up to 1 point, which is say 1% of your loan amount, and you can pay more, but that's pretty typical. Say pay up to 1 point, and that will buy your interest rate down maybe an eighth or 1/4% for the life of the loan. So you end up saving a lot more money over the life of the loan versus the money that you pay up front. And sometimes that's a good idea. Sometimes that's not a great idea, and we can break that down for people and show them the analysis of that. We got some awesome new stuff that we're using that helps break that down for people. So, yeah. What other questions, man?
How long do you need to save before you have enough for down payment?
How long do you need to save? So that's kind of dependent on a lot of things, Mary. So how long you need to save. So let's say if you come to us or a lender and they said you need 3.5% down for, let's say you qualify for an FHA loan, you need 3.5% down. A lot of that's going to depend on how long you need to save is how much you have in your budget to put back, right? So, I mean, if you can save $100 a month, and you got to save $3,000, then that's going to take you about 30 months to save that, right? Unless you can forego other things to save more money or put your tax refund that you get back in that account and put it back. But like I said, man, a lot of times there's programs that people qualify for 100% financing, so they don't necessarily have to have a ton of money. It's always a great thing to go into homeownership with money in the bank and have as much saved as you can. But don't let that just be the be all end all. But how much you have to save, it's and how long it takes is really up to each individual scenario. If you need help with a mortgage, call. Hey, thank you, Vicki. That's right. Appreciate that shout out. We just closed a home for somebody related to her, so congratulations to them. Yes. They were first-time home buyers and well-prepared first-time home buyers. Yes. They put a chunk of money down, which is kind of unusual, which is pretty awesome to see some young folks do that. Cool. Any other questions? We won't keep you on here too long today, but if you're a realtor or you're somebody in the real estate industry, this is big news coming that's going to start next year. Hopefully will help spur a lot of new activity for first time. Like we need new home buyers into the market, but right now we have an inventory problem anyway. But if you can't find that right home, man, just start socking the money away, and then when it comes January 1st of next year, you can open up your account, put all that money in there, and get that deduction for 2019. So let's see. Any other questions? I would call anyone else. Yeah. Welcome to call us anytime, Mary. But yeah, so if we don't have any other questions.
This is the quietest I've ever been.
I know. Yeah.
I'm just listening. I'm absorbing all this information because it's exciting.
It is. So let's see if I missed. I know a lot of people hopped on, so I appreciate you all joining. And like I said, just hit that share button and get this information out to those who need it. Mary asked about buying land. So here at our office, we don't necessarily deal with that directly. If it's raw land, I would always recommend you talk to your local bank, and they have lots of programs for those. If you just want to buy raw land and maybe look at building or something like that, or just buying tracts of land. That's a local bank deal. But I think that's it. We'll hop off, and if you're watching this later, go ahead and post your questions below. We'll still be watching and monitoring this stuff and answering those questions. But yeah, appreciate you guys joining us. And this will be incredibly awkward because now we got to end this.
If you have any questions, comment below, call us at 256-734-6012, or visit us online at SnyderMortgageTeam.com 24/7. We hope you have a great Monday and a great rest of the week. Bye.
Bye.